Good morning, viewers. It's Thursday morning, April 17, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Please note that tomorrow the markets will remain closed due to Good Friday. US stocks tumbled on Wednesday as investors were reminded of the cost President Trump's tariffs will have for major companies and the challenges these policies may present for the broader US economy. The market sell off intensified in the final hours of trading as Federal Reserve Chair Jerome Powell delivered perhaps his starkest warning yet on the potentially stagflationary effects of Trump's tariff policies. Benchmark S&P 500 dropped about 2.2%, while the Dow Jones Industrial Average shed roughly 700 points, or around 1.7%. The tech-heavy Nasdaq Composite fell over 3% as new chip provisions weighed on the tech sector. Wednesday's losses upset what had become a more stable environment for financial markets after the initial shock of Liberation Day that had sent markets reeling earlier this month. Stocks took another turn lower after Federal Reserve Chair Jerome Powell warned that the central bank could face difficult trade offs in trying to cushion the US economy from the fallout of President Trump's trade war. Powell, in remarks for the Economic Club of Chicago, said larger than expected tariffs likely mean high inflation and slower growth. But he noted that the US economy is still in a solid position and the Fed is waiting for greater clarity before considering policy changes. US Federal Reserve Chair Jerome Powell said on Wednesday the Fed would wait for more data on the economy's direction before changing interest rates and characterized recent market volatility as a logical processing of the Trump administration's dramatic shifts in tariff policy. Powell also denied the theory that there is a so called Fed put or level of a stock market sell off where the Fed would cut interest rates to calm markets. Powell said markets are currently attempting to assess a highly uncertain environment and that leads to volatility. Powell remarked that the markets are doing what they are supposed to do. They are orderly and they are functioning just about as you would expect them to function, he said. These remarks came in the middle of what was already shaping up to be a negative day for US stocks led by the tech sector. A tech stock rout fueled by trade restrictions deepened on Wednesday with Nvidia sliding 6.9%. The third largest US company by market value warned late Tuesday that it would take about $5.5 billion charge after the US said it will need a license to export H20 processors to China and other countries. These less powerful AI chips had been designed to comply with American export controls. The US government confirmed the restrictions and said it had put similar curbs on rival AMD. AMD made similar announcement saying the new provisions could cost the chipmaker up to $800 million. Nvidia and AMD both fell about 7% on the day. In other tech news, another industry linchpin also rattled investors. Dutch chip maker tools giant ASML, whose huge, costly machines are needed to make the most advanced chips, reported much weaker than expected orders and warned that the tariffs had led to increased uncertainty about its outlook. Shares fell 5.2%. Earlier on Wednesday, Commerce Department data suggested US commerce consumers front loaded purchases during March. Retail sales surged 1.4% last month as car buyers rushed to dealerships to get ahead of auto tariffs. The rise was even bigger than expected. Trade turmoil also hit one of the country's oldest shipping industries, shipping. Uh, Shares of JB Hunt Transport Services lost 7.7% after the company reported on Tuesday an 8% drop in net earnings in the first quarter. The company blamed slower demand from retailers caused by uncertainty over tariffs. Wall Street's fear gauge, the CBOE Volatility Index, jumped 8% after falling for 3 trading days. The dollar, meanwhile, extended its decline. The US and China have been going back and forth in a tariff battle in recent weeks. Beijing named a new top trade negotiator, a former ambassador to the World Trade Organization. New data showed China was able to sustain its growth rate in the past quarter, helped by a surge of exports by US importers in anticipation of new tariffs. Major indexes in Asia and Europe declined. Beijing is continuing to play hardball, having reportedly ordered airlines to suspend deliveries of Boeing aircraft. The White House said Trump is open to making a trade deal with China, but Beijing should make the first move. Wrangling over tariffs continued, with state leaders in California moving to sue the Trump administration. And the World Trade Organization sharply cut its forecast for global merchandise trade from solid growth to a decline on Wednesday, saying further US tariffs and spillover effects could lead to the heaviest slump since the height of the pandemic. The uncertainties left gold in an unstoppable position, with bullion hitting another record high of $3,339 per ounce, last up 3.5%. US Treasury yields fell after comments from Fed's Powell stoked concerns about economic growth and inflation pressures. Benchmark 10-year Treasury yield fell 4 basis points to 4.283% after yields surged last week on concerns about the stability of the US economy. The US dollar index, which tracks the currency against six peers, slid 0.7% to around its lowest since April 2022, in a sign investors remain cautious about US assets. Oil prices rose to a two-week high on concerns about global supplies after Washington issued new sanctions targeting Chinese importers of Iranian oil. In cryptocurrencies, Bitcoin added 0.5% to $84,389, down nearly 10% for the year. My take: waiting and watching. Policy uncertainty has been at the forefront of the recent market sell off. Economists broadly expect these policies to boost inflation and slow economic growth. To some, that combination leads to a clear result: recession. And recession odds are climbing even further as Powell pushes back the timings of rate cuts. The Fed won't act unless and until either the labor market turns or there is a systemic risk, such as a breakdown in the payment system. Powell is confirming what investors have been worried about, and that is the likelihood of slowing economic growth and more stubborn inflation as a result of the tariffs, even bracing for stagflation. What this comes down to is this continued level of uncertainty in the markets. The seesawing of stock prices of late is emblematic of the issues driving the stock market over the past month. As earnings season progresses in weeks ahead, it's unlikely that tech companies will be the only sector to warn about higher costs. This is uncertainty, and uncertainty is a killer, be it for any company, investor, or trader. Capital markets remain caught between news about new tariffs and, on the other hand, about tariff negotiations or suspensions. Even the Fed is doing what the rest of us are doing: waiting and watching. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. Tomorrow is a holiday for Good Friday, so I will see you now on Monday morning. Have a great long weekend. In the meantime, happy investing, stay inspired, and remember, it's all about money.